Hello and welcome to our webinar on discovering why media consulting firms are being snapped up in 2016. I'm Paula Allerton, Marketing Director at Equiteq, and our presenter for today is David Jorgenson, our CEO. David will be presenting for about 20 minutes and then I'll be putting your questions to him. Please post your questions using the control panel on the right-hand side of the screen. The questions box appears towards the bottom. So over to you, David.
Thank you, Paula. Welcome, everyone. Happy to be speaking to you today. As Paula mentioned, I'm the CEO of Equiteq, based out of our New York office. I joined Equiteq a few years ago from a larger middle market investment bank in the United States because I felt like Equiteq had developed a very comprehensive and unique investment banking model that was really built on expert knowledge in a specific sector. So Equiteq is today the leading M&A firm who's focused exclusively on the consulting and professional services sector. We've got offices in New York, London, Singapore, and Sydney, Australia. And we do two things for our clients. We help them realize equity value through a strategic or private equity sale of their business. And we help them prepare for and travel along the journey to sale through our strategic advisory services, which are really designed to help them understand the decision-making framework around how to build a valuable business and how to realize that value in a sale market context. So all of our advice that we give to clients is designed around an outside-in view from the market as to their value of their business in the sale context. One of the things we do and one of the services we feel we provide to the market is a significant amount of proprietary research. We spend a lot of time and money examining the market, collecting data on deals in the market and the needs and wants and activity and behavior of the buyers of consulting firms. And we publish that to the market annually. So a few weeks ago, we published our annual mergers and acquisitions report on the global consulting market. And this is really our flagship report that details the entire universe of transactional activity in the market. And you may have seen that, you may have downloaded that. And what we're going to talk about today is a specific segment of the market related to media and marketing. But first, I'd like to talk a little bit about the consulting market as an overall view of activity. Now, the media market as a specific subsegment of that will form the bulk of this webinar, and there's some very interesting dynamics happening. But when you look at the overall global deal activity in professional services and consulting, activity was up last year in 2015 by almost 10%. Now, if you see the chart on the upper right-hand segment of this page, you'll see that activity if looked at on a monthly basis, is relatively steady. There is certainly some cyclical activity in 2009, but much less of a downturn in activity than you would have seen in other sectors. But that said, 2015 was really a return to the peak levels of activity that we last saw around 2007. So when you look at overall deal volumes, it really was a return to pre-financial crisis levels. And I think that's an important context to think about if you are considering selling your firm either this year or in the near future. I think it's very, very important to think about that as an overall market backdrop. Now, if you look at the growth in the overall deal volume, most of the growth came from two of the five sectors that we cover, management consulting and media consulting. So we cover five sectors, five broader sectors when we're looking at the consulting market and professional services market. And most of the growth in 2015 came from management consulting and media, which is the one we're going to talk about more in detail today. And you can see on this page that the media sector grew by 12%, 12.5% over 2014, and management consulting grew by almost 20%. The other sectors that we cover, IT, engineering, and HR, had much lower growth rates, although all positive. and that averages out to the almost 10% growth that we saw across the broader market. So now we'll talk a little bit about media consulting. And before I get into the specific content, I think it's worthwhile to mention some of the broader dynamics in the market that are driving the increased deal activity. As I'm sure you know and have seen in your own business, in your own life, the digital transformation and really the increasing trend of your activity and consumer broadly activity to be through digital devices or using the internet has had a significant impact on the media and marketing environment broadly. And so we see a lot of the increased activity in the space driven by that digital transformation. And that is across all of the sectors that we subdivide media into. So you can see here, when we talk about media consulting, we're talking about everything from email marketing to traditional brand design, from online and traditional public relations to digital marketing, all of the increasingly technology-enabled services that the companies and consumers are using when they're interacting with each other. So media consulting deals represent about 25% of all consulting M&A. So that's a significant proportion, and so that's obviously a quarter of all deals done last year were in what we call the media sector, and you can see that the volumes in this sector are even higher than they were in 2007. So if you compare the 625 deals that we tracked in the sector last year in 2015 compares to 551 using the same criteria in 2007. The other thing to notice here, which is consistent across all of the sectors that we cover, the overwhelming majority of deals are in North America and Europe. So when we're tracking our sector broadly, we typically see the same trend, is that most of the activity is in North America and Europe. The other trend to notice here and to think about as a broader trend in the sector is the increasing convergence between the consulting world and the media world. We've just today announced a transaction where we sold a strategic marketing business to one of the large aggregators, Omnicom. We'll talk a little bit more about Omnicom later. But it was an interesting example of what really looks like a consulting business model being very valuable as a front-end service to a traditional communications and PR firm. And that is driving a significant amount of activity now, both the media firms buying consulting companies and the consulting firms buying media companies. There's a tremendous amount of crossover right now. If we look at the multiples in the sector, we can see that the EBITDA and revenue multiples have fluctuated a little bit, but in a pretty tight range since 2007, between 1 and 1.3 roughly for revenue, and around 9 to 10 or 11 on EBITDA. Now, I think it's always dangerous to use these average multiples when you're evaluating or looking at the value of a specific business, because our valuation methodology is very specific to the factors and circumstances of a particular business. But I think it's interesting to see that broadly in the sector, the revenue multiple has trended around the average for the media of all consulting, and the EBITDA multiples have trended to be a little bit higher. Now, when we look at the buyers, I think the media sector is unique in that there are sort of established aggregators, what I would call consolidators in the space, that are active acquirers of agencies or smaller companies and run them like a portfolio. And that's true of WPP and Omnicom, absolutely. Publicis as well. Interpublic is in that category as well. So when you think about the top buyers of media consultancies, it's no big surprise that they are the large diversified holding companies. WPP happens to be the largest consulting buyer overall in the sectors that we track. So they're very active, and we are very active with them. Obviously, we just closed the deal with Omnicom, as I mentioned. So they are always on the lookout, and I would say that they're increasingly looking for new and advanced services and capabilities. So they're no longer just buying scale in traditional PR, communications, or marketing or advertising. They're looking for forward-thinking and forward-looking digital and strategic consulting services. So when we talk about digital marketing, what is that? So it's really anything that leverages technology and the internet platform to reach potential customers. So web-based advertising, search engine optimization, analytics around how you're reaching companies through digital channels. So digital marketing is one of the core areas within the media world that we track closely, and it has been extremely active, both from the perspective of the traditional media firms, but also the traditional technology consulting firms. So it may be the most active area of convergence between the traditional media and the traditional tech worlds is in digital marketing and digital technologies around customer acquisition. So you see here the volumes are high relative to the recent history in this space, and the buyers that we've tracked are really across the board, anywhere from Omnicom and WPP to Accenture, Hitachi, and smaller tech names that are really looking to improve specific capabilities and specific technology credentials to broaden their business. So it's very clearly no longer good enough for the larger players to try and grow technology-enabled capabilities organically. They really have recognized that they need to acquire those capabilities in order to stay not even ahead, but current with the broader market. The multiples in this space really reflect the profitability inherent in these types of services. So you'll see that the revenue multiples are a little bit higher than the average, as well as EBITDA multiples. The next sector that we'll talk about is customer management and customer experience. And so this is also very often a digitally enabled technology play. So when you think about customer management and customer experience, this is often the interaction and the interface between consumer companies, consumer-focused companies, and their actual customers. So for example, the way that the customers interact on their phones with brands, with websites, with apps or applications in which they're purchasing services or checking the status of their account with their provider. So that's a customer management experience. It often takes the form of a website or an app. It is a sector where we've seen a little bit of a drop in 2015 versus 2014. I don't think that there's a message of significance here in the drop. I think it's a sector that's relatively specialized, and so you'll see sometimes in specialty sectors you can have a little bit of a fluctuation in the data. The buyers that we've seen be active in this space are the large diversified accounting and consulting firms like Deloitte and KPMG and E&Y have all done sort of representative deals here. And they're interested in the sector because they want to really stay ahead of the curve. They want to find new capabilities and new ways to interact, to help their clients interact with their customers. And so it's really been a broad-based interest here in these types of businesses. And there is a lot of specialization in this sector. So the high valuations that you can sometimes see here are often driven, by significant specialty capabilities that aren't otherwise available. And I think just the fact that consumer behavior is changing so quickly, and the digital transformation of the consumer interface is so rapid that when when a service provider figures something out related to that interface, they can be highly desirable very quickly. So we've seen some companies in the space grow up and get very big very quickly. So what does this mean for the sellers and owners of media and marketing firms? I mean, I think, first of all, it's been a very active market. We are seeing, despite even, you can look at the data and that says one thing, but in our activity and conversations with buyers and sellers, this is an area of significant interest right now that isn't showing any signs of slowing down. I think of special interest are those digital agencies that can combine the creative and the technology enablement piece. I think that a lot of the large media and tech firms have tried to the tech firms have tried to get that creative piece through acquisition, and the media firms have tried to get the tech piece through acquisition. That's been a significant driver of deals in recent years. But what we're hearing in today's market is that those companies that have figured out both, that can do the creative but also make it work, are in significant demand. So I would say that the overall lesson is that owners with firms that are ready to sell, very well positioned in the current market to find a transactional outcome from a very broad and diverse base of potential buyers, both from the traditional media and traditional consulting world. So, and that's really what we do at Equiteq. We are very focused on helping owners and builders of consulting, professional services, and IT services firms find that right time. And we think about it as a journey along that exit curve, where you go from a startup business to a fast growth mode, an establishment and scale building, and then a business that is looking for the new ownership for that next phase of growth. And so we would certainly be very pleased and happy to talk to any of you if you have specific questions after the webinar or any time, and my contact details will be on the in the webinar as distributed. So I think right now, Paula, I think we can kick it over to some Q&A if anybody's put in any questions.
Thanks very much, David. Yes, we have a few questions for you. So the first one is, are there other firms that are actively buying media and marketing firms other than the large conglomerates like WPP and Omnicom?
Yeah, I mean, I think that we're seeing interest from really almost across the board. We've seen interest from the large tech firms like Accenture. We've seen firms, the outsourcing firms, and the tech enablement firms like Cognizant and Wipro be very interested. We've seen that, as I mentioned, the big four, PwC and Deloitte. Deloitte has been extremely interested in digital. And then there's the smaller specialty firms that they're always looking to grow. Both in and out of the traditional media world, absolutely.
Thank you. Second question, do the large media and advertising firms structure deals differently than the consulting firms?
They seem to a little bit. I think that the large holding companies tend to have a specific valuation model and approach that they use, and they like to stick to it because they buy a lot of businesses and they want to be consistent, and I think they want to have all of the businesses that come onto their platform sort of come on the same basis. So they're very disciplined in most cases at sticking to a specific model. I think that model in the case of the holding companies was typically developed in the context of adding scale in their traditional agency work. And so I think there's been a little bit of a feeling recently that as they've entered the maybe the more faster growth and more tech-enabled services market, that those traditional acquisition models may not fit as well. I think the holding companies tend to like a longer earnout as a general trend. I think they like a bit of something more approaching a 3 to 5 year earnout, which is a little bit longer than we normally see. But that's not a rule across the board. I think it's just something you'll see that their model has traditionally been a little bit of a longer earnout where there's sort of a gain share amongst the two parties rather than an outright acquisition up front. So they're very committed buyers. When they're interested in something, they're typically very reliable to complete, and I think that they're starting to adjust their models a little bit to reflect some of the competition for the more digitally enabled technology plays.
Thank you. What types of digital agencies are most in demand right now?
I would say we're hearing a lot of interest in those that are applying analytics to solving problems. So those that are analyzing data and can take large data sets and turn them into actionable intelligence around customer behavior or customer acquisition or just improving marketing spend or strategies. That's one area, sort of that analytical data-driven model is very interesting. And then the other is really the just making the customer-focused technology work well. And so the combination of design and execution in the technology space, so that what customers see of when customers are interacting with a company through a device, which are increasingly small screens, those that can make that interface actually work and work well, both from a creative and a technology enablement perspective, are very much in demand.
Thank you, David. We haven't had any more questions. Unless anyone wants to post something now for me, I'll just give you a few seconds. No? Okay, so I think we'll leave it there. Thank you very much, David. If you aren't already a member of EquityTech, then please do join our EquityTech Club. It's a free source of information for consulting firm owners who are looking to realise equity value in their businesses. In EquityTech, you'll find expert guidance, unique research, guest articles, and lots more, including a monthly newsletter. It really is a great tool if you are thinking of preparing your business for sale or selling. Thank you very much, David, for a very insightful presentation, and thank you to everyone for attending. A recording of this webinar will be available within 24 hours, and we'll be sending you a link. And finally, if you do have any questions or comments, please feel free to contact us. We'd love to hear from you. Thank you again.